I am mining investor and editor of Resource Stock Digest, Gerardo del Real, here with my partner, Mr. Nick Hodge, who's an investor and publisher of Daily Profit Cycle. This is the 239th episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk about the tanking markets. We're going to talk interest rates. We're going to talk gold. We're going to talk uranium. We're going to talk government shutdowns and the madness going on politically briefly, because that's really all the attention it deserves. Of course, as always, a lot going on. But before we get to it, Mr. Hodge, welcome back. We missed you last week.
I appreciate you covering the podcast on your own, Gerardo. You did a great job. It was a lithium soliloquy. I watched the whole thing. I made the notes. I marked the timestamps, as it were. And so thank you for doing that. It was good to get away for a week, as you noted in the podcast, my 10th anniversary. So Mexico was great, and it's good to be back. What do you want to talk about, and how are you?
I'm well. Listen, I'm glad that you're back. We missed the intelligent discourse. We missed the wittiness. We missed the charts and graphs that you specialize in. It was all rant and rave last week, but it was, for lack of a better word, therapeutic. But definitely glad to have you back to kind of offset my madness. No, look, let's get right into it. I talked about tanking markets. We had a conversation about a month and a half ago where we mentioned tax loss selling season, and you mentioned to me that you had a conversation with a gentleman that had said, well, actually, I don't think tax loss selling is going to be that pronounced this year because there's not a lot of stuff to take profits in. And boy, was that wrong. Not you, but him. There's definitely some liquidity drainage happening, and it's a big, loud sucking sound, and not the good kind. So let's talk on the lack of liquidity out there and how, light volume is making for pretty drastic moves downwards. There's several holdings of mine that don't trade a ton, but every 20,000 shares, it's a 6% move, and those moves aren't to the upside right now. So let's start with the liquidity in not just the resource space, but the overall markets right now.
No, I'm glad you said that, because that's what I was going to do. I was going to say it's not just the liquidity on the small end of the spectrum. There's liquidity issues in the broader market indices as well. If you recall, a couple of months ago when the Magnificent Seven were going up, one of the things I was saying is that these are, become liquidity stores unto themselves. One of the reasons that funds were flowing into them was because they were very liquid vehicles, and people were worried about the needing of liquidity as the year went on. One, because of the rolling off of some stimulus era programs, but two, because of the resumption of student loan payments and the potential, to use your word, suck, that could create a need for liquidity. And that's exactly what we're seeing here. You've got those student loans resuming this month. You've got a market that's finally realizing Jerome's not playing around, and they think the rates now are going to be higher for longer after calling for a pivot for, gosh, I'm losing track of time. I think it's been over a year. They wanted the more cowbell or whatever. So they're figuring that out. And then you see this downward move that the stock market's seen, and the S&P is down 6% just in this month, for example. And it's come on low volume, and so working down to the small end of the spectrum. I mean, it's the same on the TSXV. That market is down. That index, the venture portion of the TSXV, is down 15% in the past 6 months. I was looking earlier. Yeah. On light volume, and it's, the paid is akin to that 2014, 2015 period after the sell-off of the 2011, 2012-ish sort of resource boom. Yeah, people are feeling it. And so it's the middle of October, I should add, that that's typically the month for volatility and events, but it's also the time that businesses and high net worth individuals file their taxes. So that creates another need for liquidity. I was talking to my broker this morning because I had made a couple of sales for a tax bill, and she was keen to point out that I wasn't the only one she was hearing that from, right? And so they're selling pressure, and it's not even November or December yet. So we'll see how the tax loss culminates over the next 2 months.
We can't talk Fed hawkishness without talking about mortgage rates over 8%. We had a conversation off air. I shared with you that I bought a place, but was looking to initially maybe take a loan out on it to just avoid taxable events, right? And the more I looked at it, the more I just stood there and shook my head. I'm not paying 8% on a mortgage. It just doesn't. I don't feel right doing that. Mortgages in the past are 3.5%. And so mortgage rates being what they are, the 10-year spiking, I know, has got to make a lot of funds and institutions and banks nervous because it hasn't been an orderly spike. We had whispers of an intervention from the Bank of Japan in their bond market. And of course, the dollar doesn't trade, in isolation. It is the global reserve currency, which by definition, means that it has serious implications when you have disorderly spikes like the one that we've been seeing. It touched the 107 level, the US dollar index did. And so thoughts on where that goes next. And is this going to be another one of those situations that the Fed gets us into that it can then no longer get out of? Because it's starting to look that way to me.
Yeah, the talk of Goldilocks and soft landing has seemingly come out of the mainstream lexicon. A couple of crystal ball questions there. First, I guess, let me look back and then we'll see if we can look forward. And mortgage rates are over 8% on the 30-year mortgage. As you said, that's the highest in something like, I don't know, 25 or 30 years. And there's some other things that are looking like 2007. So the 2-year yield is up near 5%. It's like the highest it's been since the global financial crisis. And you've got money market funds that are yielding over 5%. So just to go back to the first topic of discussion, liquidity, 5.25% on the money market, those damn attractive when you're witnessing this volatility in the market and equity prices going down. And I guess let me talk about that for one more second. Look at the utility sector, for example. And it's selling off, unlike, where I should say, like it has only a couple other times in history, 2000-ish, 2007-ish, and 2020-ish. And this is because it's interest rate sensitive. And as these bond yields continue to go up, interest sensitive plays like real estate and utilities continue to go down. And so they're telling you that all is not well in the market. The bond yields are saying to the Fed that you're keeping rates higher. That's why the 2-year is pinned up there. We'll see. I mean, they've got to raise rates or lose all credibility, considering that prices are reinflating. You've got oil still at $90. You've got the inflation that's likely going to hover, 3.5% to 4% for the next couple of months, and you've got employment which is yet to break, and that's why I'm hesitant to look into my crystal ball, because it's going to be contingent upon that labor component. That it's interesting. The JOLTS numbers this week showed, a bunch of job openings, right? They ticked back up. It was like 9.61 million job openings, I think the number was, the highest in a couple of months, and reversed the downtrend. But then you look at the wider picture, and so that told the market, I should say, or the market took it to mean employment is still strong. The Fed is going to have to hike, and then the market has continued to sell off. Employment, though, is not that strong as the JOLTS would indicate. So we're going to have to see what happens here over the next couple of months. I'll say this. The non-farm payrolls have been revised downward every single month so far this year. That hasn't happened since 2007. If you look at the CEO surveys, they don't see hiring picking up, and there's not really a lot of change in payrolls themselves. So my current call, if I have to make one, is you get another hike. That might not be until next year, given what the stock market's done so far this month. It might make the Fed shy away from a hike in November, but the odds tick up as you get into 2024 of another hike, and then this thing keeps getting pushed out here until later in 2024 when things finally start to break on the back of that other hike. So are they back into a quarter? I'm not sure, man. I'm old enough now to have seen a lot of quarters and a lot of cans get kicked down the road. So when I see things like, that are, pinned all the way to one side, like what happened this week, we're now spending more on the interest than on the defense budget. It's like, yeah, okay, but what is that besides a headline? Like, we'll wait and see until something breaks. So I get that that's big. I get that deficits matter, but I guess as I mature, I take the market more as it comes to me and stop trying to tell it what to do.
Speaking of telling it what to do, gold, after looking beautifully, technically for maybe 6 or 7 months, right? Holding that 1874 mark pretty well. broke through that while you were gone last week. It's down now to 1820 as we speak. I shared my thoughts last week. I'd love to hear yours. You are more the chartist than I am.
I actually meant to get there. I wrote gold after buying it. I stopped talking because it would have been the perfect segue, because gold is now submitted, right? We were saying that it was holding up well in the face of the strong dollar.
Yep.
And in the face of rising bond yields. And as you just noted, that broke down. So it's right at the precipice. You know, it needs to hold essentially 1814, 1815 to remain, in a bull market, I would say. And I've been content to buy the dip so far. Bought a bit more revival gold. I was writing either last week or the week before in the weekly letter. And I guess pound the chest for a little bit. I told you to sell the RIP in August when it was back up to 1960. And
yep,
because that's the second half of buy the dip, right? Because sell the RIP. So and we did that with Artemis, and then bought this most recent dip with revival, just on the speculative side. So and if it breaks down, like I say, much below 1814, 1815, then trouble ahead, 1700, 1600 handle perhaps. But again, crystal ball question. And so far it sounded okay. It was a last check before we started recording back in the 1820s. So step by step, day by day.
Gold stocks, base metal stocks, critical metal stocks, lithium stocks, if you want to separate that. What is the most appealing speculation to you? Or a couple of names. This will be the freebie part of the get your money's worth part of the podcast. But what looks damn attractive to you at current prices out there?
Give me a time frame.
You can hold it for the next 12 months.
Oh, for 12 months. I mean, there's some really oversold copper names. I'm not sure what copper is going to do. It's down to 350. I've been telling you it was going to be comfortable at 350 and not 4. But when I look at names like, I know you've been talking about Hannon and even Cujo Copper, but and even the bigger ones, like I look at Southern Copper and BHP, those have had a rough go. So not that you want to step in there and catch a falling knife, but at some of the levels on these equities I'm seeing of quality copper speculations, I'd be content to buy them here and hold it for 12 months, I think.
I love the comment that you just made, Nick. You asked, how long am I holding it, right? And I think that's a perfect segue before I answer the question. As a speculator, folks, you have to give yourself the luxury of knowing how long you plan on putting the trade on, or how long you're willing to let the thesis play out, right? Patriot's a great example. I know what I own, so yes, I'd rather see a higher share price, but I know what I own. I'm holding the bulk of that until the end game, right? That's very different than a lottery ticket. That's a drill hole play, right? And then to that, I got to highlight Nevada King, which had 108.3 meter hit of 11.64 grams per ton gold in a tough resource market. It's worth noting the stuff that's working. I'm not biased on that one. I'm not a shareholder. It's not a recommendation in any of the letters, but kudos to that team for a heck of a hit there. Back to your question. Know what you're holding and know how long you're holding it for. If we're talking 1 year, I really like Aldebaran, right? They just secured $20.5 million from a strategic. They have multiple strategics that'll likely take them out at some point. They have a huge copper gold resource. They just had some phenomenal numbers, 600 meters of, 0.5 grams per ton copper percentage copper equivalent, and something like 379 meters of 0.7% copper equivalent. So I think Aldebaran gets taken out at much higher prices. I don't see it happening anything less than $500 million. Market cap right now, I believe, is somewhere around the $100 million mark. So, in the next 12 to 18 months, I could see that giving you a 3 to 4-fold return easily in a better copper market. If we see copper do what I think it's going to do, and run to $5 in the next 12 to 18 months, that multiple obviously gets kicked up quite a bit. So I like Aldebaran. If we're talking 1 year, we're talking 2 to 5. Hannon, I mean, look, I have millions of Hannon shares. I'm biased. It's my horse in the race, kind of like Patriot is in the lithium space. Hannon is that to me in the copper space, because I think what they have in Peru is really unique, really special. I think there's going to be multiple company making discoveries on that land. And the only thing, as CEO Michael Hudson keeps saying, the only thing that can stop that from becoming, a $5-10 stock in my mind is Peru and the permitting process and the amount of time that it takes to work through some of the red tape that the country has increased over the past, 12 months with all the political upheaval that's gone on there. But if you're patient and you're willing to hold that for a couple of years and you're willing to, I don't mind holding it, because after a year, it becomes a long-term gain versus a short-term gain when it comes time to do taxes, right? So you want to try to mitigate as many of those short-term gains as possible. So do I mind holding it for a year, waiting for a permit to come? No, I don't mind one bit, as long as what I think is going to happen there happens, because if that's the case, my 25 cent shares are going to be $5 and $10 shares in very short order. And that would, of course, put a smile on my face and subscribers' faces. But you got to have the patience for that. You have to be able to be bored a little bit and let that thesis play out, or you buy in at higher prices. That's the offset. You got to ask yourself that question. So, yeah, those are two that I like right now. Did I answer your question?
Yeah, I'm a fan of both those as well. And yeah, kudos to the Night of King. Colin Kittle's had a heck of a run, not just with that company, but with Newfound Gold as well. And so serially successful people being serially successful. Paul Matizik is on the board of that Nevada King, and I'm obviously a biased shareholder which is back to drilling, by the way. Just plowed the roads in, and reading the news release between the lines is they're formally referring to Altar Central, at least, as Altar United now, and saying that this current campaign is going to sort of give it a really good indication of the extent of the mineralization there. So
it's huge. It's huge. It's huge. Some of the smartest people tell me it's so huge. It's big. It's big. You can't wrap your head around how big this is.
Oh, man. We might get 4 more years of it. It's going to be very interesting. And then, of course, I'm a shareholder as well. So what else you want to talk about? Politics?
I love it. Let's switch gears. The Donald popped in my brain just because of all the madness. Look, I have no dog in the political fight. I think we're due for a cleansing, right? I think, speaking to the fourth attorney, as we often do on this podcast. I
finally started reading it on vacation, by the way, so it's great.
Preach, brother Nick. Talk to us. What's to come? I don't think it matters whether it's and let me qualify that. I don't think in the long term it changes the narrative of the cycle that we're in. It does have consequences, obviously, for policy and rhetoric and all of that. So I don't mean to mitigate what a Trump presidency or a Michelle Obama presidency or a Kamala Harris presidency would translate into. They each obviously all come with baggage, is my point. I don't have a horse in the race, but it's interesting times. What's the intro to the book? I haven't started yet because I'm finishing my Homo Deus book, and I'm almost done with that. So I'm wrapping that one up, which is a phenomenal read, by the way, folks.
So the intro is sort of an outline of the book, which I actually like. And it says that it gives away some stuff. Basically, he's talking about a culmination or a big event around 2030 and then an ending of the fourth term around 2023. So that's like the main prediction of the book. And that the first half spends the time looking back, sort of as I was just saying, looking back so we can look forward, looking at the generations again, et cetera. Basically a recap of the first fourth turning book. And the second half, which I'm not to yet, is what this turning is going to feel like and look like for each of the generations that are living through it. So I almost skipped ahead to the second part because that's the part that interests me. I figure I'll read the whole thing through. But 2023, it sounds like for the bookend on this returning, which is interesting.
2033 or 2023?
Oh, sorry. 33.
Okay. Well, I thought so. And I thought I misheard the first time, but then you said it again.
I'm misspeaking. Okay. Yeah. A big event in 2030, and then a culmination in 2033. So that's 2 more presidential cycles away. I mean, that's out there.
Yeah. So listen, the only reason that the Trumpster came to mind is because if anyone wants to, speculate as to why I'm so agnostic politically, look at the shit show we have going on right now, right? The Democrats ousted the speaker. No, actually, the Democrats did it. The Republicans ousted their own speaker.
Feinstein died. Yeah,
Feinstein died. She still hasn't resigned. By the way, she still hasn't resigned, but she's passed. Condolences to her family. But the state of our political discourse and scene right now is an absolute sham, folks. And again, if there's one thing you take away from my commentary, is don't get yourself hurt, arrested, or killed over politicians that do not care about you. It's not that serious. You can cast your ballot, you can have your opinions, you can voice those opinions passionately. I respect all opinions that are expressed, respectfully and civilly, obviously, but don't get out in these streets and ruin your lives, people. There was a gentleman in Wisconsin that was arrested for threatening to go shoot up a Wisconsin lawmaker. He went to the Capitol building, got himself arrested, posted bail, went and got his rifle, and went right back and went to go finish it up, and then got himself arrested again. And so that guy's, I mean, that's a federal crime. You're probably going to look at 5 to 10 years on something like that because of the intent. What is worth serving 5 to 10 years for?
Well, I mean, I can't answer for that gentleman. We've seen obviously a spate of political violence, whether it's Pelosi and the hammer, or BLM, to the looting, to Kenosha. I mean, there's a long list, right? And sadly and unfortunately, that is part of a forced turning, right?
Yeah.
Well, it has to be shed, and even as far back as the Patriots, right? Blood has to be shed to refresh the tree of liberty. Is that right, Jordan? So
that's correct. One of my favorite sayings.
And the book talks about that a little bit, saying that what's at stake is so great over the next 10 years that people sense what's at stake and they want their values. Because what happens is people get awakened, they get disenfranchised with the institution and the processes. They want to tear it down, and then they want to build the institutions back up. And people now realize that that's going to happen, whether it's conscious or subconscious. But the reason you ask why, I don't understand why people do that. They can sense that what's at stake is so great that they're willing to commit violence or die or whatever it is to ensure that their tribe's values get applied to that rebuilding, is essentially what the book is saying.
Yeah. And I guess my point is that to me requires a belief that the elected officials of the party that you're loyal to are actually going to act on your behalf. And if you have that faith in your local or your national politician of choice, kudos to you. I just don't share in that, right? I saw for 4 years, and look, I disagreed with a lot of Trump's policy, and there was some of it that I really agreed on. But where I disagreed, we had pretty sharp breaks in philosophies. And one of the most contentious issues was around the wall. I thought it was rhetoric, and I thought it was rhetoric because it's ineffective, not because we don't have an immigration problem, but because there are better solutions to address our immigration problem, like actually passing comprehensive immigration policy and coupling that with smart law enforcement, right? That's targeted. Building a wall to me seems like such an antiquated solution that is really meant just to rally the base. So the people that criticized Trump for years on end for the rhetoric and for doing it and wasting taxpayers' money are now the same people that want to tell me that because we have a crisis at the border, that Biden building the wall is doing the right thing and protecting the country. And you can't have it both ways, people. It's the hypocrisy in politics, to me, that really has turned me off. And it's also the fact that I don't believe at the end of the day, any of these politicians have my best interest at heart. I think they have the best interests of lobbyists, the best interests of big money, the best interests of corporations. So, I said 5 years ago, if you can get yourself if you can become a lobbyist, or you can buy yourself a lobbyist, if you're fortunate enough to do that, that's the best way right now to campaign for your issue of choice. And sadly, that's more true now than it's ever been.
And, I think there's a section of this Republican Party that senses that, right? Because we were just saying the Republican Party ousted their own speaker, and it's a small subset of that party. And they smell that blood in the water, exactly what you just said. Is there a politician who's going to do what you vote them in office to do? And Matt Gaetz, for better or worse, or whether you agree with him or not, thinks that that's what he's doing, right? He thinks that he's acting on behalf of his constituents and what that crowd elected him to do. And if you listen to his rhetoric, he says some of the things actually that you were just saying, like, look, these establishment Republicans up here, McCarthy or whoever it is, stand up here and tell you what you want to hear, but then they go right in the back room with the lobbyists. I mean, Matt Gaetz was up there saying that from the House floor. And, I think, I don't know if Matt Gaetz is the Messiah or if he's the new generation of politicians that the fourth turning calls for, but he is saying some of the right things, and he's scratching at the surface of some of what I think the populace is feeling. So again, for better or worse, or whether you agree with them or not, it's interesting. You're watching the fourth turning play out in real time, and he's speaking to those exact things that you're talking about. And that is, I guess, being successful. I mean, they just ousted the speaker for the first time in history, right? So things to play out. And then I guess the last thing I would add is it's good to have that fourth turning context, right? Because you don't have to freak out about everything. You can know that it's part of a process that's playing out, and you don't have to be tribal or partisan or on edge or anything, right? You can just know that this is part of an extended process that's playing out. And I think that's going to be really important. It's certainly been important for me to have that context over the past couple of years.
I couldn't agree with you more. I feel like I'm seeing a more volatile version of a story that I've seen, many times in my, relatively young life, right? I'm 44. I'll be 45 at the end of this month. So I'm not old, but I know I'm not young anymore. But I've seen this story several times. I remember, Rand Paul, right? At one point, I really agreed with his approach to politics. A decade or 15 years ago, he was anti, the neocons and the war machine, on both sides. He was for fiscal responsibility. He was for all these things. And then he got elected. And it was like, oh, fuck all that. Give him the money, make it rain on the military-industrial complex. Just be my campaign, baby. And I was like, you know what? I'm out of here, man. These guys are a joke. Like, it's just
definitely a disappointment relative to his dad, for sure.
Yeah, we've all said, we've all buttered up the compliment on an extra pretty girl a little much, right? Just we've all, come on. That's how I look at it. So anyhow, don't get yourself hurt, arrested, killed for these politicians. I don't care about you that much. Reach out to your neighbor, have civil disagreements, make your community better. I've said this 100 times. I'll probably say it 100 more because it's going to get worse out there before it gets better. Back to resource stocks. We've talked a lot about the doom in the resource space. There's actually some good stuff going on. Uranium is holding up really well, and the equities are holding up really well. And again, not to pound our chest on this one, but we were positioned beautifully for that. You and your portfolio with different stocks, and me on the Junior Resource Monthly side, with a good section of the portfolio dedicated to just uranium stocks. And look, for a year during the last consolidation, we had to try to guide and navigate the turbulent and boring waters in the uranium space and really express to people that no crystal ball. We don't know when it's going to take off. But when it goes quickly, right? I talked about this a bit last week. It's clear to me now that, the $70 price, it isn't going to hold very long. We're headed to 80 and then we're headed to 90. And at 90, it gets interesting because I think the utilities have to come off the sidelines, because then it starts getting harder for them to justify to their customer base and their board of directors why these contracts aren't being rolled over and secured. And I think that 90 and then the utilities coming out is what takes it, over 100. I say all that to say there's still a lot of runway in the uranium space, folks. There's still a lot of money to be made despite a lot of the uranium equities being at 52-week highs, because they're coming off a very low baseline. You talked about the venture exchange and the TSX and it being down some 16% this year. That's off a low baseline. It was down last year too, if I'm not mistaken. It wasn't robust anyhow, right? And so the uranium space, sure, the stocks are hitting 52-week highs, but they're doing it off a low baseline. All of these stocks are going to double and triple in the next couple of years. The quality names anyhow. And so I think we've given you plenty of quality names and quality plays that we like. I know subscribers of both our services on the longer term services have gotten, a lot of guidance there, but that's a sector that I think will continue to outperform, and it's good to have a little light at the end of the tunnel that's not attached to a trade, right?
Yeah, trees don't grow to the sky, of course. There's going to be corrections, and those are healthy along the way. But I think what you are seeing is a real deal, a fundamentally driven uranium bull market with buyers back in the mix, as opposed to the false start that we saw in 2022. So, I've been seeing some questions from subscribers talking about essentially trading, are we selling out and back in? And, that's an interesting question. It sort of depends on how you're positioned, how many different positions you have, when you bought those positions. If you're late to the game, I would be using these pullbacks to build and add to your positions. I think there's still time. If you were extremely early, I mean, I got positions from 2017 in my portfolio where we're up a couple of 100%. Tapping a quarter of those positions for whatever reason, portfolio management, cash position building, paying the bills, whatever, isn't a bad idea when you get a 30 to 50% run in a month like we just saw in September. Am I ringing the bell and cashing in my uranium positions? No, I don't think so. I've talked about the chart a lot. When the spot price got up above 67, and it was clearly going to go to above 73. There was nothing stopping it, and it got right to 73, which is where there's a tiny bit of resistance. And it needs to poke through there, and once it pokes through there, it seems like it can stair step to 80, 85, 90, as you were saying, pretty quickly. So I do think it's a bright spot. The fundamentals continue to improve. I hate running through them all the time because we know them by now. Germany is turning back on their coal plants, because I read this week, because they shut down their nuclear reactors and can't get through the winter. Like, that was clearly a boneheaded position, and the world sees it. I see countries approving small modular reactor designs, and I don't see a lot of demand forecasts that include demand from small modular, and that's seemingly come on faster than a lot of people think. And then, and perhaps most importantly, Pano this week, and you too, pivoted on nuclear energy. Long the opponents, they now are embracing nuclear energy in the climate fight. And I only mention that because they are so in the headlines this week because of the Sphere in Las Vegas that they are now playing their concerts at and taking residency up in. So if you can get Bono on your side, it's probably not a bad thing, although he's kind of a bit of a hypocrite if you look at powwowing with George W. Bush and Tony Blair over the years anyway.
Yeah, I'll leave it alone. I'm sure we have a lot of YouTube fans. Great band. They made some great music. Again, it's there's levels to everything, and it's easy to play both sides when there's that much money involved. It doesn't make it right, but it is what it is. I'm supposed to remind all of you to go to dailyprofitcycle.com/subscribe to get all the rantings and ravings from me, insights and wit. And charts and opinions from Mr. Nick Hodge, and not just us, but our talented group of editors that opine on everything from the broader economy, the tech sector, the crypto space, you name it. There's a letter, a service, and free commentary for pretty much everything financial universe. So go give that a look, sign up, get it straight in your inbox. Tons of good reports in there too, and a lot of new reports to come. So be on the lookout for those. Anything to add to that, Mr. Hodge?
I was just going to say, we just updated a lot of reports for sure, and there's a lot on the way. So lots of new material over at Daily Profit Cycle. And look, we sell research as well, is worth pointing out, because I see some people lamenting the movement of certain stocks they hear about on the podcast. But if you're a member of the paid letters, you certainly hear about that long before we discuss them publicly and in the podcast. So I know we cover a lot here, but still worth reading the research that we put out, both freemium and paid, as it were. So head on over there and check out the different services as well.
Absolutely. What are you watching this week, Mr. Hodge?
Oh, that's a very interesting question. It's not GDP time yet, but it soon will be. And I guess I didn't get a chance to talk about this, so I will here. Nobody knows what the fuck is going on. If you look at the Atlanta Fed GDP estimate for the third quarter, it's up around 5%. And if you look at the St. Louis Fed GDP estimate for the third quarter, it's like 1.6%. Like, these are the people who procure and curate the data, and they're one is over 100% higher on their GDP quarterly estimate than the other. And so if you're feeling confused out there, don't feel too bad. Those that hold the keys to the data don't know what's going on either.
We should remind everyone that along with the free podcast and the free commentary at dailyprofitcycle.com and the sponsor-based free content that you get over at Resource Stock Digest and the paid services that we manage and oversee and write. On top of that, we also hit the conference circuit every now and then. And so both Mr. Hodge and I will be recording Bizarro World live from New Orleans in early November. We always run into a lot of subscribers up there. We love the dialogue. Please, if you see us, both of us try to be as approachable as humanly possible. Come out and come say hello. It's a great conference. The lineup this year is fantastic. Danielle DiMartino Booth, Rick Rule, Mr. Jeff Phillips, who rarely makes an appearance on the stage, a friend and mentor to the both of us. He'll be on the stage on a panel. And so, no, look, there's a host of really, really excellent minds from different fields. Matt Taibbi will be there, a journalist whose work I read and most times respect. So yeah, no, come on out and take a peek. It's definitely worth the investment in time and money and effort that it takes to get out there for those 4 or 5 days.
I'm literally booking my flights after we get done recording this.
Excellent. We'll make sure to put a link up. That's all I got on my end of it. Obviously, I'm going to be watching. Can't let you go. Sorry, Nick. Opportunity or breakdown? The energy space. Oil's back down to 84 after being pretty firmly above 90. You talk resistance all the time. You talk the charts. I would love your take on that, because that is one that, I always say I'm not an expert in anything, but I'm pretty all right at the resource stuff outside of the oil space, right? I'm not a lithium expert. I'm not a battery expert. I'm not a copper expert, but the stock stuff, I've been at it for a while. So have you. But oil is the one sector that I just stay away from. It's I don't have a knack for it. It doesn't click for me. What are you seeing in that space?
I think it's an opportunity. It's going to cause a recession, but it's an opportunity. It's the thing that's going to drive the inflation back higher, and we essentially haven't got a recession in the past, I think, 14. That hasn't been predated or predecessed by a rise in oil prices, and so they're reinflating. Pullbacks are to be bought for now, and there's still opportunity there. And that private company that's not public is drilling away and was up 20% today. I wonder if they see something good coming out of those wells.
Do we want to talk about that company? We'll leave
we talked about it a couple of weeks ago. I think we can let it stew.
Well, let it stew. That's it. That's all I got, everybody. Listen, have a great week. We will see you all next week. I'll be watching for Patriot News, of course. I think we're more than due. I am Gerardo Del Real, along with my co-host, friend, colleague, Mr. Nick Hodge. This was episode 239 of our weekly therapy session that we like to call Investing in Bizarro World. Mr. Hodge, send us off with some words of wisdom.
No, adios familia. That's it.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.